Let's look at a live example. So we can start from anywhere. Let's say we start from here. The market drops. Bearing in mind that this is the most relevant structure. Notice how there's a bit of a pullback here. It then pulls back, makes a new low. So where is price likely to pull back to? At the moment, price is likely to pull back towards this particular area. So anything in the middle is just a pullback, right? Just a pullback. And as you can see, price did in fact pull back towards this level and then drop. So let's actually take a look at this particular scenario. So notice how the previous structure was here. It's actually at the sun, break of structure to the low, caused by this significant liquidity level. Price then obviously dropped. So let's actually zoom in and we can see that within this liquidity pool, which yes, I will cover in a different video, it retested this previous liquidity pool. It didn't come up here, right? So you're not waiting for a trade. You're looking at the most relevant structure that took out the previous significant low. Okay, so let's actually zoom in one more time. So price did in fact pull back. Now, why didn't it make a new low? Well, this is why you need to build a case study. At the moment, there's lots of bullish momentum, so it's looking unlikely that will make a new low. Now, if price pulls back, why are you holding your trade all the way down here and be a hero, etc., and looking for those optimistic trades where, you know, you're looking for the perfect trade, whereas you need to basically be trading what the market tells you, not what you want it to tell you or what you're thinking, is what the market is telling you at the time. So price did in fact pull back towards this level, and notice how it made a new high. So if we actually, you can see it's made a new high. The reason this is a new high is because it made a new low. So now that it's made a new low, we're looking at this piece of information. That's the new high. And what was the move that made the new high? It was within this significant area here. So notice how price actually pulled back. It rallied to the upside, pulled back, continued. But what was the previous move? You can see, look, leg up, leg down, and it moved up. So let's look at this example. We can see that price broke structure with a lot of momentum, right? So again, you might be thinking that, yes, this is a structural low, and yes, it did go up, especially if you go to the 4-hour time frame. That's what the market will tell you. But if we look at the fine details and we follow the market, what was the previous move that took out structure? Look at this move down. This is the previous move, right? The previous leg down, but then this is the significant rally that took out structure, right? So now we're expecting a pullback eventually towards this level. Now, what happens in between? There's going to be new highs, there's going to be new lows, there's going to be a bunch of structure and indicators and lots of opportunities. We're still going to be capitalizing on these moves, but if you just map out this particular area, once price eventually pulls back towards this area, you know there's a setup. But that's not to say we're not missing out on these trades, because we're definitely capitalizing on these trades. So let's actually move with the market. Right now, this is a complete freestyle. Market moves up, pulls back, makes a new high. And can you see eventually it pulls back towards this level, right? This was the previous significant move here. So the market moved up, and this is the point of interest that price is likely to reverse from. And as you can see, that's exactly what's happened, right? Now, that's not to say that we're not capitalizing on any moves on the way up or on the way down. The reason for that is, okay, first of all, you know, we've identified the point of interest, which is all of this area here. Obviously, you're going to have a nice wide stop, and we're also looking at this significant area. So once price rally to the upside, we can still capitalize on the way down. We don't have to just wait for the setup there. So once we've identified a new structural break, we know that this is a new high. As you can see, previous low, new high, new higher low. The reason this is a higher low is because this was the move that took out the previous structure, right? So we're looking at this particular structure here to break for any potential shorts, right? And once that actually happened, we can see that price broke from this particular area. And now we're looking for potential shorts. On this occasion, obviously, it never really pulled back to this level, which is fine, but we're obviously expecting a pullback towards this significant area to go long. Price then obviously rallied to the upside, took out structure. So now, if we actually update this pattern, or what's actually happening, what can we see? Okay, what was the move that took out the previous structure? So let's actually map this out. This is the break of structure. Let's actually update this and write it down. And what can we see? The previous leg that took out structure is this significant move here, right? So we're looking at this piece of information for the future. Let's see if it actually goes there eventually. And yeah, I was completely freestyling this. And we can see that it did in fact reverse from this area. And again, it doesn't mean we're not capitalizing on this move here. There's going to be plenty of opportunity, but you need to just have these as your reference point where price is likely to reverse to. And where did it reverse to? If we follow structure, we can see, look at the structure. Made a new low. What was the move that took at the new low? It was this particular supply area right there. And you can even follow it back and look for opportunities on the way up. So let's just say where, you know, prices dropping to the downside. Okay, price rallied, makes a new high, makes a new low. What was the move that took out the previous low? As you can see, let's actually write this down. Significant area that took out the new low was caused by this particular liquidity pool right there. So eventually, yes, price pulls back. What happens in between is irrelevant now. Yes, it's making new lows. And let's just say it continues to make new lows. It might even make a new high. It doesn't matter what's happening in the middle. What matters is that price is likely to eventually retest the previous liquidity pool where price took out structure. And once it did, okay, prices pulled back, made a new high here. So let's actually see what was the move that took at the new high. We look to the right, we can also see it was caused by this significant move here. Right, so let's actually write this down. Let me just clone this real quick. Again, what's the move that took at that high? Look at the pullback. You can see it in more detail on the smaller time frame, but this was the move that took at the previous high. So it's no coincidence that price reversed from this area, but that's because the composite man is taking profit on the way down, on the way up, leaving clues, even the imbalances, right? We're going to get into more detail with the imbalances, the bank levels, the banker blocks, but the composite man is leaving clues, and you can obviously add your little confluences. There's a potential boomerang right here as well that I just spotted, which I'll cover in more detail, which is more or less a fake out of the third tap, right? 1, 2, small third tap ejection, fake out towards liquidity level that took at the previous structure, and then a rally to the upside. So let's move with the market again. Price is now dropping, completely made a new low, right? What was the move that took out the new low? It was caused by this significant fella, right? Price then rallied to the upside, it's pulled back. Now, everything in the middle, as you can see, is just consolidation. It hasn't really made a new high or a new low. Right, so we're looking at this piece of information. And then eventually, okay, it made a new low here, but we're gonna cover in more detail what defines a new low. There's 2 scenarios, right? This is just a liquidity grab. This to me is not a new low. For me, a new low has to be a body close, a strong body close. A wick is just a liquidity grab, right? So we follow the market on the way down and on the way up. So this is what happens now. If you've thought for a second that this is a new low, as you can see, right? And price has actually pulled back. Okay, you can see an entry here. Price then pulled back again, made another new low, pulled back, etc., etc. So yes, it is working, but these are what you call low probabilities, new lows. We need a body. right? Look at the move on the actual setup. So let's say we actually took a trade here, stop loss wherever it is, and TP at the previous low, right? This is a valid setup. Okay, this is fine. Why is this fine? This is fine because it took our structure. This was the previous move that took our structure, and we sell it on the way down. Okay, fine, you know, but look how it's moving, right? It's not moving too convincingly. And even if we're looking at this particular area, right, this actually took our structure here to the left. So we're looking at this area and just look how choppy it is. You know, we don't want to be catching these trades. This is what you call low probability, low volume, low breaks, right? The moves that we want to catch, in fact, are these moves. So eventually we can see if we actually tag this up. Okay, let's make the screen a little bit. There we go. So eventually what we can see is this. We're paying attention to this breaker structure, right? This is the significant breaker structure that we're really focusing on, right? This is just noise and low probability lows. However, once price actually broke structure with a couple of strong bodies and they clear confident confirmation of a new low, then we're using that particular area and look at the difference in the move down compared to these moves down. Big difference. Obviously, your stop loss is something that we're going to cover in more detail. It will most likely be a nice tight stop wherever it is, but we'll cover the stop loss and the TVs in more detail. But these are the sort of moves that are likely to manifest with momentum. And there's no coincidence. Look, there is no coincidence that based on the fractals on the opposite side, that not only did we follow the rules, we waited for a clear confirmation to the downside. It finally pulled back. We spotted an entry and then we catch the big power move. We don't want to catch these small corrective moves. You know, these are just not significant, right? We want to catch these big moves here. And where is price likely to reverse to? What I pointed out before, as you can see. Breaker structure caused by this previous move. So this is a good area to take profit if you're looking to sell the market on the way down. And if we follow the market one more time, okay, price then obviously dropped to the downside. Nice little 12-hour trade there. Let's actually delete this. Price then broke structure. And where did it break structure to? From this significant area here, right? And then we can catch these moves here. And let's actually see, is there any particular reason or scenario why the market reversed from there? Okay, there's structure here to the left, but most importantly, what I can see is the structure here. Look at this pullback, small pullback. So really, we're looking at this particular area here. Hold on, let's do this again. And we're looking at this little imbalance here. So we'll definitely be looking at a stop hunt below this area. And there we have it. So there's a reason for these particular areas to take profit, especially because if we look to the left, what can we see? There's a retail trap. Look at this perfect retail trap. Equal lows, right? So we're targeting equal lows as a TP, right? So retail at this double bottom, if they're long for whatever reason, where do you think their stop losses are placed? They're placed just below, just below. And why do you think they get taken out? We look to the left, we're using smart money concepts, right? So a target would not only be a breaker structure that we just spotted here to the left. You know, there's a structure here, small pullback, rallied. This was a move that took a structure. All of this is just nonsense. Okay, we see equal lows. So we're building a case study. Now we've got a double confluence for an exit. And finally, what have we got? A breaker structure, pull back to the previous move, drops to the downside, and a good area to take profit. And this is where we can now buy the market because we've just built a case study and we've got multiple confluences for a reversal. So not only are we making money on the way down, now we could be making money on the way up. So these are just some examples that we'll cover in more detail in the future videos. Let's look at some more examples. Price is obviously dropping to the downside. It then pulls back. It's making all these significant new lows and new highs, but we're focusing, what's more important is we're focusing on this. This is the most relevant high and the most relevant structure. Again, what's happening in the middle is irrelevant. It could be making new highs and new lows, new highs and new lows. As long as it doesn't break this significant, most relevant range, anything in the middle, whether it's making new lows, is irrelevant because we know we're stuck within this range until we break the most significant structure. So let's actually zoom into more detail, see what's actually happening. Let's actually do this again. So we're looking at this particular structure here. That's the new high, and this is obviously the new low, as you can see. Price then dropped, it's pulled back, made a new low here, but it's insignificant because we haven't taken out this low. Price bounced a bit, and eventually, finally, we've got a couple of bodies closed. We don't have a wick, like a liquidity graph such as these wicks. We've got actual body closes. That's very, very important. For a structure to be made or to be broken, it needs to be by minimum 2 strong candlesticks or 1 very large candlestick, right? We don't want to see a wick like this or these wicks closing structure, because what you'll see and realize is that, okay, let's say we're looking at this particular structure here, pulls back, drops, pulls back, there's a liquidity grab here, pulls back, and it just makes new highs. This is low probability. We need a couple of body candlesticks, right? Eventually, once it did break the significant structure, we then move with the market, right? We moved the market, and what was the previous move that took out structure? It was caused by this significant fella right there. This person right here was the move that took out structure. Obviously, we add in our levels, as you can see here. And what do we have? A drop to the downside. And we just follow the market on the way down. Follow the market on the way down. This, to me, hasn't broken structure. Again, it's just a liquidity grab. Just a liquidity grab. And finally, there's a break of structure. Why is there a break of structure? Because we finally have a couple of bodies closing. Not these wicks here. These are just stop hunts and liquidity grabs, which I'll cover in a different video on how you can catch these tiny moves in those small time frames. And yes, we can capitalize everywhere you can see, everywhere, on the way up, on the way down, on the way up, catch these big moves here as well, but also capitalize on the way down. But at the moment, we're focusing on the most relevant piece of price action, the most relevant highs and the most relevant lows. Eventually, once price did in fact break structure, as you can see, this didn't break structure to me. Eventually, these candlesticks did. And then what happened next? There was a pullback towards this level. Surprise, surprise, it then dropped to the downside. And what are we looking at? We're now looking at the most relevant structure break, which is here now. And now we're following the trend. And then what can we see? Fine. There is a few candlesticks that took out structure. So now price is likely to pull back towards what move? Now, over here, you can see it never really pulled back, but it pulled back to this move. But this is why we zoom into the smaller time frame and we can see a small pullback and capitalize on this move. If there's nothing there, there's no trade. You just do not take it. Do not force any trades. Let the market come to you. It's the most important advice I can give you. Eventually, price, again, it's just pulling back. Again, break the structure, break the structure. Break of structure is a little bit wonky here, very, very weak break of structure. But the reason it's weak is because the sellers are losing steam. Eventually, boom, massive momentum to the upside. It broke out several structures. And what's happening here to the left is price likely to retest the previous move that took out structure. Of course it is. Look, smart money is leaving clues right here. Look at this imbalance between the buyers and the sellers. This small gap is where smart money are likely to get in, but it's also going to be a bunch of orders within the zone. The reason I'm just doing a larger zone is just to make it easier, because it's just a lot harder zooming into the 1 minute time frame, the second time frame, to actually show you where price is likely to reverse to. But this is how you can spot smart money. And you can see, look, price actually did in fact reverse to the upside. We could have capitalized with the 10R on just this one trade, right? But on the larger liquidity pool, there's going to be multiple areas that they're looking to get in again multiple times. So what happened? We can see that price clearly broke out structure. Multiple structures, in fact. Let's actually highlight this. This was the most relevant move. And what was the move that took that structure? It was caused by this larger liquidity pool. And eventually we can see that price did in fact pull back eventually to this level, and then it rallied to the upside. So we can just keep on moving with the market, right? Eventually it moved with the market. You can see it made a new high caused by a couple of bodies. And what was the move that took out the previous high? I don't know, let's find out. Let's actually find out that break of structure. Break of structure caused by this move here. Again, this to me is a weak, significant high. I wouldn't really class it as a break of structure, but we can see it is still gonna actually work out, caused by this particular pullback on the way down. And surprise, surprise, it did actually go long. But this is a trade I probably wouldn't take myself, because the break of structure was very, very, very weak. So again, we can just move with the market and just go anywhere in time. Let's go to the live markets, in fact. Let's go to the live market. Let's actually delete everything. So what's the date today? 11th of September. We actually go with the live markets. Obviously, there's more pullbacks. You can see this was a previous leg up that took that structure. Price is now dropping to the downside with momentum, failing to make a new low, right? So where is price likely to pull back to? Most likely this significant area. Even in crypto, stocks, or any other asset class, we can still use the same concepts. We just follow Bitcoin, for example. We see there's a pullback, large momentum to the upside. So price is now likely to retest this particular area here, right? And the reason for that, again, we can see that this is the significant new high caused by this previous leg up. And what's happened next is that smart money are leaving clues, even in crypto. So if we actually map this out, we can see there's a bunch of equal lows. So where do you think retail will have the stop losses, right? Price is likely to retest to this level eventually, right? Again, I'm not saying you can't capitalize on the moves, because again, we're still going to be capitalizing on these moves here, right? We're literally trading all these little moves here, on the way up, on the way down, on the way up, on the way down, on the way up, on the way down. Look at this break of structure caused by this move, price rally to the upside. And the same works in crypto. So if we actually look at this piece of information, eventually, yes, we're still capitalizing on the way up and on the way down, right? We're still doing that. Break of structure caused by this liquidity pool. Price then obviously rallied to the upside. And why is it reversing from here? We can see there is a break of structure. Look at the break of structure caused by this move, this significant area. It's no coincidence that price is reversing from here, right? So we're capitalizing on all these moves. And even if we implement these equal lows, which I'll cover in more detail in a separate video, right? Price is likely to retest the most relevant break of structure. And what have we got? There we have it. It completely reversed from this area. And where did it reverse from? And why? Large momentum to the upside. Look to the left. And what can we see? We actually follow it around. New lows, new lows, new highs, new lows, new lows, new lows. And then eventually, boom, a large move to the downside. Anything in the middle is just a pullback. Eventually, it pulls back to the most relevant structure that took out, the most relevant volume to the downside that took out the most relevant structure. And this is why it completely reversed from the downside. The same happened here, where price rallied to the upside. Everything in the middle is just a large pullback to eventually retest to this level. But we can still capitalize on all the moves happening within the larger pullback. That's as an example that even in Bitcoin and crypto is working, and even on any single time frame, right? Again, look, we can even see, let's say from this particular area. Oh, okay, I don't think it's pulled back there as of yet, but it looks like it's likely to pull back there eventually one day, maybe not for a while, in fact, because right now we're on 45,000. But again, this significant scare that happened on the 6th of September, there was a reason for this. There was a reason for this large drop to the downside, right? Not only was there a pattern that was in confluence, this nice little boomerang that we can see here, because it's perfect boomerang. Again, the boomerang is a 1, 2, third type rejection, trick everyone, a stop one of the pattern, and we look for a liquidity level to the left, and then we sell it, right? But where do we sell it from? Let's go to the weekly. We can spot multiple bank levels, etc. But oh, here we go. Surprise, surprise. Bank level here to the left on the weekly, caused by what? Pull back to the downside, made a new low, right? And what was the move that took our structure? It was this bank level, that liquidity pool. And now we're expecting a move to the downside. So this particular move that took our structure, there was a reason for Bitcoin to drop the other day a couple of percent. And again, this will be in confluence with the boomerang on the smaller time frame. And there we have it, some momentum to the downside, right? And at the moment, if we actually follow structure on Bitcoin, what can we see? Okay, it's made a new high, new low, new high, low, new high. Hasn't really broken structure here, has it? It's formed a wick, but it hasn't really broken structure. If there was a large body close below here, then that's a cause for concern. But at the moment, to me personally, it's still quite bullish. Because when you think about it, let's actually zoom in a tiny bit on Bitcoin. And what can we see? That this body here, the actual body close, hasn't really broken structure. Now it's just within this range here. The most important aspect is as long as it doesn't break this significant structure, then at the moment, I'm still pretty bullish on Bitcoin. But we could have definitely anticipated short from this area based on all these confluences, based on this break of structure on the weekly, the daily, the 4 hour. We could have anticipated this move to the downside, which was only 20%, which is just a pullback, to be fair. But this gave me a heads up to take some profits on some altcoins. So even identifying structure, the smart money way, you can capitalize not only in FX, but also stocks, crypto, bonds, etc.